Hi, I'm David Armstrong, Managing Editor of WealthManagement.com. I'm here with Larry Pitowsky, the co-founder and co-manager of the GoodHaven Fund. Larry, thanks for taking the time.
My pleasure. Nice to be here.
Tell me a little bit about the story behind the GoodHaven Fund. It's a brand new fund, relatively new.
It's a new fund from some not-so-new guys.
You spent a decade at Fairholme.
Yes, my partner Keith Crowner and I were part of the investment team along with Bruce Berkowitz at Fairholme. Fairholme Fund was launched. We left day-to-day management in 2008, and we started the GoodHaven Fund in April of 2011, a little over a year ago.
Okay, and what is the strategy for the GoodHaven Fund? What are you looking at?
GoodHaven Fund, we are striving to look for opportunities with plenty of upside but not a lot of downside. We are risk-averse people but also opportunistic. We are striving to give our shareholders and our clients solid long-term results without taking lots of risk.
Sure. You've kept a lot in cash over these periods of volatility, correct?
Yes.
So you're kind of sitting on the sidelines until things settle down, or what kind of signals are you looking for?
When we started the fund in the spring of 2011, we wrote a bit then to our new shareholders about concerns we had about European sovereign debt at the time when it was not being discussed. We went slowly as we started the fund, but during these periods of volatility, we've put a lot of cash to work when we've had a chance to buy under stress. Our favorite thing is to buy when everybody else is panicking. So in the summer 2011, we took our cash percentage down and did a lot of buying, and we've done so again over the last month or so during May when there were periods of significant volatility. So now we're about 80% invested, which is pretty close to the highest we've been invested since we launched the fund.
Okay, mostly domestic equities?
Yes, mostly domestic equities. We've done a little bit of fishing here and there in Europe. We also own some distressed debt, which we can do. We have enormous flexibility. Companies of any size. We can go outside of the U.S. So wherever we find the biggest bargain, but we would expect to be primarily in domestic equity.
Okay, and your largest holding currently?
Largest holding is Spectrum Brands, which was what we would like to call an orphan security. They own certain value-oriented consumer brands, Rayback batteries, Cutter & Buck insecticide, Remington razors and shaving products, and they came through bankruptcy court as an over-leveraged company. Exited bankruptcy with new management, a better balance sheet, slow-growing but strong free cash flow, and rapidly deleveraging. We were able to buy shares at what we think were a very attractive price. And as a matter of fact, somebody put out a research report recently and said that Spectrum should do $5 of free cash flow next year, and the stock is still in the mid-30s. We paid significantly less, but it still seems attractive to us.
Interesting. You say you've done a little bit of fishing in Europe, so you're fairly optimistic about the future of that?
Well, I wouldn't say that we're optimistic, but for us, anytime there's somebody else fire in a crowded theater, we're going to go look and see if there's really a fire. Now, in Europe, there are some fires, but we can't help but look at areas that are under significant stress and are in the headlines every day. So I would not expect us to have a significant exposure there, but it would also not surprise me if we find one or two or three things to do amidst all the negative.
And in terms of research capabilities, how are you screening for your stocks?
Keith and I, there aren't that many benefits to life to not being 25 years old. And one of them is, you've seen a lot of movies, and we have a long list of things that we've looked at or owned over our lives that we're always keeping an eye on. We do some screening from a valuation perspective. And we also, every time there's an area that's under a significant cloud, we can't help but go look and see what's really there.
And how's the fund performed so far?
So far, so good. We're not the type to run around the office and high-five each other. It's not our style, but the folks at Morningstar tell us that since inception, we're in the top 1 or 2% of our category, and last we had heard we're something like 500 basis points or so ahead of the S&P, while holding a significant amount of cash and owning a portfolio of kind of 15 to 25 things that we think are much cheaper than the market. So we'd like to really give our shareholders their cake and eat it too. We'd like over a long period of time to generate solid results, better than the market and our peers, while taking much less risk.
Okay, well, Larry, thanks very much for taking the time to talk to us.
Thanks for having me.